Interactive Brokers has been around for decades, gives you access to 150 plus markets, and is used by both pros and retail investors worldwide. But is it actually safe to park your money there? Brokers going bankrupt aren't theory. It happened before with Beaufort 2018, MF Global 2011. Even if you eventually get everything back, accounts can be frozen for months. In a crash, that delay can cost real money. What happens if Interactive Brokers went bust? How much of your cash and investments are protected, and by whom? Today we're breaking it all down, country by country, in plain English. Here's a quick summary. IBKR has top-tier regulation in multiple jurisdictions. It's regulated by the world's major financial authorities, like the SEC, FCA in the UK, ASIC in Australia, and dozens more globally. Even if the broker goes bankrupt, most likely assets would be returned to clients, since client assets kept separate from IBKRs. Only in extreme cases of fraud, investor compensation schemes would step in. If IBKR vanishes, the trustee simply hands them back. It's a publicly listed company. As a NASDAQ-listed company, IBKR publishes audited financials and follows strict compliance rules. The company is well capitalized, has no long-term debt, and investment-grade credit rating, S&P A-, stable outlook. Here's a reality check. Historically, an A- rated broker like IBKR has historically shown a 1.2% 10-year default rate. That's very low, but not zero. Investor compensation schemes, SIPC in the US with extra Lloyd's coverage, Irish ICS in the EEA, ICF in Hong Kong, and others. In Europe, for instance, protections vary by country. For example, retail clients with Interactive Brokers Ireland are covered by Ireland's investor compensation scheme, 90% of losses up to €20,000. No banking license. IBKR is not a bank, so UK clients are not covered by the UK FSCS for cash, only by SIPC or ICS. Stay to the end, we'll show you what protections you get based on your country. What is Interactive Brokers? Interactive Brokers, ticker IBKR on the NASDAQ, traces its roots back to the late 1970s. It grew from an electronic market-making pioneer into one of the world's largest online brokerages by client equity. Today, it serves millions of accounts across 200 plus countries, offering stocks, ETFs, options, futures, bonds, FX, funds, and more from a single multi-currency platform. Importantly, for safety, IBKR's core business is agency brokerage. It does not run a big proprietary trading book that could blow up the balance sheet, meaning it does not take big risks by trading in the stock markets. The firm focuses on execution, clearing, custody, and margin lending, largely secured by client collateral. This eliminates a major source of broker risk. If the company itself goes broke from bad trades, client assets can get stuck in liquidation. IBKR's sole role is facilitating client trades, which means its capital is dedicated to client protection. During the 2008 crisis, clients actually moved money into IBKR for safety. Depending on where you live, you might open with IBKR US, Ireland, UK, Canada, Australia, Hong Kong, Singapore, or others. During sign-up, IBKR assigns you automatically based on residency and local rules. Each regulator means different compensation rules. Here's a quick summary. US clients. You're covered by SIPC up to $500,000, including $250,000 cash, plus IBKR's extra Lloyd's of London policy that extends total coverage into the tens of millions. EEA or IBKR Ireland. If you're in the European Economic Area, you're probably under IBKR Ireland. That gives you access to EU markets and Central Bank of Ireland oversight. But the statutory investor compensation scheme is only up to €20,000. Tiny compared with what many investors hold. UK clients. Post-Brexit, UK accounts go through IBKR UK, but most assets are still custodied and cleared in the US. FSCS coverage is limited. The main line of defense remains SIPC at the clearing level and IBKR's capital position. Canada. Canadian accounts sit under CIRO rules and are covered by the Canadian Investor Protection Fund up to $1 million Canadian dollars per account category. Hong Kong. IBKR Hong Kong clients are covered by the Investor Compensation Fund up to 500,000 Hong Kong dollars if a licensed intermediary defaults. Australia. Coverage depends on what failed. The National Guarantee Fund handles certain ASX-related defaults. Australia also has a compensation scheme of last result, $150,000 Australian cap, for certain misconduct cases. Read the fine print. Since this protection will vary according to the jurisdiction where you, the investor, live, we summarised the investor compensation scheme applicable for each of the subsidiaries. Pause the video, or check the link in the description to learn more. Important, these schemes protect against broker failure or default, not market losses on your investments. Some products or professional accounts may be excluded. Please confirm this information with IBKR directly. These schemes only kick in if, after distributing segregated assets, there's a shortfall because of fraud, operational failure, or missing assets. In practice, large diversified brokers rarely trigger full scheme limits, but you shouldn't rely on them for big portfolios. One of the biggest safety factors is whether the broker itself is financially sound. Interactive Brokers is publicly listed, publishes audited financials, and operates with substantial excess regulatory capital. Recent disclosures show billions in equity capital, well above what regulators require, and no long-term debt at the core operating group. Interactive Brokers LLC also carries an investment-grade credit rating, S&P A-, stable outlook. How does IBKR make money? Interactive Brokers makes money through a few different ways: paid subscriptions, commissions charged for providing services, net interest income deriving from several services, and other sources. In particular, as we can see from the broker's financial statement for the 1Q 2025, the majority of their revenue comes from commissions and net interest income. As you can see, IBKR is very safe from a regulatory and capital standpoint, but it's not perfect. Here are real downsides investors mention. Not a bank. No deposit insurance on idle cash unless you opt into sweep programs. No checking account. Debit card discontinued in many regions. Complex platforms. Steep learning curve. New users can feel overwhelmed. Operational friction. Account opening and document checks can be long. Tax forms, product permissions, and currency conversions confuse beginners. So, is Interactive Brokers safe? For most long-term investors, yes. It's heavily regulated, financially strong, and operates some of the industry's strictest risk controls. If you invest large amounts, focus on diversification and understanding how your cash is held. Check the links below for the full written guide, compare brokers in your country, and subscribe for more broker safety breakdowns. Feel free to let us know in the comments below if you have any questions, and I'll see you next time.